Yeah, I think first of all, as far as Laurus Labs is concerned, I think they have been issued Form 483, for their Vizag facility, and I think there were about four or five observations. So I think unless and until now we get clarity from the management as to how things are going to be cleared and when regularity would happen at this facility, I think definitely the next couple of quarters are likely to be quite challenging in terms of revenue and margins. So I think that's what is visible in the stock. The stock has opened weak today. My sense is that Vizag is a very important facility for Laurus, and I think any delay in getting again approval from US FDA could possibly impact their overall performance for the second half of this financial year. Although longer term we are quite positive, but I think the near term looks definitely quite challenging. And as far as Shilpa Medicare is concerned, see, this is a very leading oncology player. They're now diversifying into non-oncology products. And I think this approval for their Bangalore facility for the Australian market is definitely a good sentimental booster. I mean, what kind of revenue and what kind of top line contribution comes in from this product would obviously decide its future course of action. But our sense is that over the next 6 to 12 months, despite 34% year to date upside, the stock definitely looks attractive. I think if one were to look at the next 12 to 18 months, I would believe that any dip in the stock price would be a good opportunity to accumulate because oncology is a very strong point for the company, and this is one space where margins are very attractive and very limited number of players operate in this market. Yeah, I think, see, as far as the private sector banks are concerned, we definitely have a positive bias in the longer term. But, in terms of valuations, our sense is that a lot of catch up has already happened. I think specific stocks to mention would be ICICI Bank, Axis Bank, IndusInd Bank. Here probably a moderate upside of say 13-14% looks possible. ICICI Bank has been our top pick. We are looking at a target price of around 1150, 1200. But if you look at the PSU banks, my sense is that the PSU banks could offer a better opportunity in terms of re-rating, considering the kind of strong credit growth, the kind of balance sheet improvement which these banks have done. And most importantly, a lot of these banks have now adopted technology which earlier was absent. So my sense is that, you could probably see a better risk reward in stocks like SBI, a Bank of Baroda, or maybe typically a Canara Bank, where typically these banks are now getting a lot of interest from the institutional buyers. Like Bank of India did a QIP, that was a very roaring success. Indian Bank has also done a QIP. I think very strong response to the QIP. So I think a lot of funds are now looking at these banks very closely and expect a better risk reward. So our sense is that within this pack, I think it would be better to put your bet on at least for the next say 6 to 12 months. Yeah, I think one thing which I would like to mention is that despite the fact that the real estate sector has done remarkably well, we have seen a lot of stock upside across many companies. I think the best is yet to come, and most importantly, demand continues to be very strong. Inventories have been moving despite higher interest rates. Hopefully, inflation coming down, and by February, March, if we see the interest rate cycle, with the interest rates moving down, that would be an additional booster for real estate companies. Coming to Sunteck Realty, I would believe that our sense is that this is largely a Mumbai-based company. They had announced a large project in Boisar, in the affordable housing segment, and it has been doing quite well. I think, despite the fact that the stock has not done that well, but our sense is that inventory sales plus cash flows generated by the company have been pretty strong. So I think over a longer term, I think it definitely could do well. But I think the markets always are looking at selective pockets, typically the premium Mumbai segment, typically North India. And I think in this category, I would be more positive on, bigger players like Oberoi Realty, DLF, a smaller Gurgaon-based player like Anant Raj Limited. So, these are companies where we feel that a lot of juice and a lot of upside still remains yet uncovered. And more importantly, I think next 6 months could be even stronger considering that the festive demand has been good. So hopefully, once interest rates start moving down, I think you're going to see a further re-rating for the sector. So I think I would suggest investors to stay invested. Yes, I think buying selectively is the key. Across the board may not be the answer, but these 2-3 companies, Oberoi Realty or typically even a Sunteck or a Anant Raj, definitely could give in good returns over the next say 12 to 15 months. So I think the cycle has turned around and it's not yet a time to sell your stocks in a hurry. You're right, because I remember REC earlier was considered to be a dividend yield stock. People used to look at the dividend and then buy the stock. But looking at the kind of sharp upside now, the dividend yield does not matter. The markets have started looking at power financing companies in a different perspective. But I think some amount of profit booking is essential. And I think at these levels, it would be a little risky. Your margin of safety is definitely very less, at these odd levels. So I would believe that, unless we get some meaningful correction, only then I think stocks like REC and PFC could obviously do well. In fact, the new kid on the block, IRIDA, has also started moving, considering that they are large, power financiers in the renewable energy space. So I think, it's the flavor of the season, but I think clearly in terms of fundamentals, it's a time to basically be a little cautious. I think, investors who are holding on should book part profits and I think hold on to the rest of their stocks. Longer term, definitely the picture looks to be good, but in the near term, I think these seem to be quite fully valued.